All right, good morning. After our 2 week, or good afternoon for some in the different time zone. This is Helen Thomas and the CDFM study group. We will begin review of CDFM Module 3 this morning. And we will cover competency number 1, which is fiscal law, and competency 2, because I had to miss last week. I think I had too much going on. So I usually pause for a couple of minutes to see if there are any questions there, Miss Tina.
Hi, Miss Helen. No,
Yes.
no, you're fine. I was out, the last couple of weeks for health reasons, but
Okay.
I was just getting ready to ask you that. So you're going to recover fiscal law again under 3 this time.
Correct.
Okay.
So typically, because I know fiscal law accounts for the majority of the questions on module 1, 2, and 3, if I cover 1, I'm going to also cover 3.1. And when I get to module 2, I'm going to come back again at the back end of that to go over the fiscal law to cover, because it doesn't matter, even if the module you are studying does not have a lot of information in the book for that section, they can ask you any question from the other modules, if that makes sense.
Yes.
So hopefully the past couple weeks, for those that were studying for module 1, went ahead. I did get a few feedback that they did successfully navigate module 1. So now we're going to focus on module 3. It doesn't mean that you ignore module 1. It's not one of those tests where you can just forget the stuff that you learn and tested on. All of the information overlaps, so you kind of have to build on each other. So for those on the telephone line, you also can contribute if you have questions, concerns. I think I can multitask enough to assist you at any point. So this is the same module, fiscal law that I went over. And let me put this disclaimer out, because I do get a lot of feedback sometimes that people say, well, I had some questions and it was not in the study guide. And I can say, yep, I believe it, because the CDFM certification test is not just from the study guides. They also list all the laws and the regulations and the policies and the directives. You are expected to read those. Do I say you have to read them to pass? No, you can just study what's in the book and be successful and pass the exam. But you have to understand the process. It's not just memorizing what's on the page. Oh, fiscal law is Congress telling us what to do with the funds. You got to understand how fiscal law plays into the whole financial management, resource management, budget process. So are there any lingering questions of anything that you may have read or covered before we begin the fiscal law? Voila. So this, again, is a study group. You have to have your own study guide. I'm not saying, and I need to say this because I don't want ASMC coming and wondering who's this Helen Thomas, and is she taking money out of her pocket? Nope, I don't get paid. Nope, I don't accept gifts. And nope, I don't give anyone the study guide. You buy your own study guide, you become an ASMC member, and you study and pass a test. So this is no different than if we're going to college together. We have our own study guide and we're studying. All right, enough of that. All right, so the basic idea behind fiscal law 3.1.7 says that anything that we use the appropriations for must be authorized by Congress. So the basic axiom, the use of public funds must be authorized by Congress, is basically saying Congress must put it in writing to say we can. Or if you have that miscellaneous funds, then can it be covered by O&M, or is it covered by MilCon or procurement? So these are the kind of things as financial managers. Yes, we do have ethics lawyers, but the ethic lawyers are not the one processing the transaction. Let me see if I can move. Make this a little bit bigger so I can see it. Okay. So if you have any questions while we're going through, please raise the hands so I can see if you have any questions. Otherwise, we'll go ahead and proceed. So fiscal law is built on various authorization, laws, policies, starting with the Constitution, the authorization law, the appropriations law, comptroller general guidance, and so forth. So those are some of the things. If you've already covered module 1, like we did a few weeks ago, you would have covered a few of those things. So when you move to page 3.1.8, you will see constitutional authority. And what does Article 1 say to you? Even if you don't know what's covered in it. What does Article 1 say to you, Miss Tina? I'm gonna pick on you.
Well, what it says to me that Congress is the only one that's authorized to collect taxes.
Right? So whatever is discussed in Article 1, you know it's governed under Congress, because as I mentioned, 3 branches of government: legislative or Congress, executive or the president, judicial or the courts. Article 1, Article 2, Article 3. So if you learn the branches of government in that order, you already know what's covered under Article 1, Article 2, and Article 3. So automatically, if you see on the test and they start with Article 1, your mind should be, okay, they talking to Congress or the legislative branch. So if it gives you the article and then it starts talking about, under this article, this branch of government is allowed to raise revenue, collect taxes, declare war, then because it's Article 1, you already know the answer is legislative or Congress. So those are just some hints. So Article 1, Section 7 talks about Congress passing the bills to raise revenue, collect taxes, and Section 8. And then if you don't remember none of them, you need to know Article 1, Section 9, because that is the reason the government was shut down if we do not have an appropriation law or a continuing resolution. Because Article 1, Section 9 basically says no money can come out of the Treasury, which is the nation's bank, unless you have an appropriation law in place, an effective law. So that's why the government shuts down. If you don't have an appropriation law or the temporary stopgap continuing resolution, then the government shuts down. On the bottom of page 3.1, let me get my glasses. Trying to be cute and can't see nothing. Under Article 1, you also have GAO standards. The GAO standards for appropriations law is the GAO Red Book. Throughout the CDFM, we've talked about stoplight, red light, yellow light, and the green light. The red light is what?
Appropriations.
Appropriations law, because it says it on the bottom of page 8. Yellow book talks about what? Auditing. And what about the green book?
Internal controls.
Internal control. Just like you see me doing when you're studying, you have to then recall the other information you've learned on that topic. You cannot treat them as individual information. The GAO stands for Government Accountability Office. Why do we get guidance from them? Because the GAO works independently for Congress. When Congress gives us the funds, Congress says you can do this, you cannot do this. Well, Congress doesn't have time to check to make sure we're following those rules. So here comes the GAO, Government Accountability Office. Their job is to monitor the execution of those funds. And which branch of government executes funds? Not a trick question, but I need you to think about it. So we got 3 branches, right? We said legislative, executive, judicial. Of those 3, which one of them executes funds?
The legislative.
No.
Oh.
No, legislative, no, they make the laws.
Judicial?
Judicial, what does the judicial do? They interpret the law.
Enforce the law?
So what's the third one? Executive.
It would be executive.
The executive branch. Remember, the president's budget, the president have to
yes.
submit a budget to Congress for approval. So when Congress approves the budget, that means they're approving the executive branch budget. You gotta have to see it from that perspective. So yes, we're the ones spending it, but all our budget estimates feed into the president's budget. The president submits a budget estimate to Congress. So whenever it's approved, the GAO is monitoring the executive branch. I have to point that out, wink, wink, because lot of time people don't see that. We all fall under the executive branch in that sense when it comes to funding. So I just wanted to point that out, making a note here. So the stoplight again, red light, GAO red book deals with appropriation. GAO yellow book deals with auditing. GAO green book deals with internal control. And the next section you go to, when you see they talk about internal control and auditing, then you'll go over the same information again. On the bottom of page 319, it talks about the Budget and Accounting Act of 1921. It's important enough to know that law because it did three things. It required the president to submit the budget I just talked about to Congress. And the budget is submitted for, what does it say? All three branches of government. So it's crazy, right? The president is submitting the budget to Congress, but part of Congress budget is in there too. So the president must submit the budget to Congress annually for all three branches of government. The second thing, it created the Office of Management and Budget, OMB. So the budget office for the president is OMB. You need to know key players. Congress has the Congressional Budget Office. The president has Office of Management and Budget. What is the title of the budget office for the Department of Defense?
Oh,
What was that?
no, I'm just growled out loud.
You growled,
I can
right?
see it, but I
So
can't.
just don't forget, you're studying a DOD exam, so you at
Yeah.
least need to know what's happening at the DOD level. So the USD Comptroller, you've heard it before, is the budget office for the DOD, Department of Defense. So Office of Management and Budget was created out of the Budget and Accounting Act of 1921. And also Congress established the GAO. It used to be called the General Accounting Office. Now it's called the Government Accountability Office. So those are three big things that consistently comes up in the study guide. So you need to know at least the law that established those. Budget and Accounting Act of 1921. Always say the year with it, just in case it comes up again. All right. So because OMB is so important on page 10 on that chart, the last one, you're gonna consistently see the OMB circular A11. Anything dealing with the budget formulation, budget execution, and all of that auditing, all of that stuff, all that budget stuff is rolled up in OMB circular. Whenever we receive guidance from Office of Management and Budget, it is often published in a circular, OMB circular. When we receive guidance from the DOD, it's often a DOD instruction document. So just keep that in mind, the difference, so you know what level you're talking about. Any question just far? All right. So page 3111 talks about the sources of authority. Again, you can't spend any money unless you have the authority to do so. There are two types of certification: fiduciary versus pecuniary. What's the difference? Fiduciary is mainly talking about using the right fund. And the word pecuniary alone sounds like, okay, I can go to jail with this one. Pecuniary is when, like a dispersing officer, the person that certifies that payment, that final payment that's going to be paid to that contractor, to that vendor, is a pecuniary certifier, versus a fiduciary certifier saying, okay, should we be using Milcon, O&M dollars, research and development? They're certifying the proper use of, or the appropriate fund to use. So that's the difference between pecuniary and fiduciary certifier. All right, fiscal law, page 12, 3112. Every appropriation has a specific purpose, time, and amount. And typically we say, if someone violates any one of those, we say they violate, that's an ADA violation. But what does that mean? Now, as CDFM, you got to go a little deeper. What part of the Anti-Deficiency Act law are we addressing? Did they violate purpose, which is 31 U.S. Code 1301, time 1502, which I think is 31 U.S. Code, and that's the paragraph and the section. Time, which is 31 U.S. Code 1502, and amount has 31 U.S. Code 1341, 1342, and 1517. What you need to know are the differences. So it's either chapter 13 or chapter 15. So chapter 1301 deals with purpose. So if someone violates the purpose, they use the wrong appropriation because of they violated purpose, they violated 1301. Appropriation shall be applied only to the objects for which the appropriations were made, except as otherwise provided by law. You read these things and then you put it in your own words, because you may or may not see it in this format again. So 31 U.S. Code says I have to use this right appropriation for this particular purpose or whatever it is that I'm trying to accomplish. So starting on page 14 and 15, you have general expenses that deals with purpose, and then specific authorities that we have. So general, your TDYs, travel, your books, your materials, miscellaneous are general operating expenses. Purpose, specific purpose, authorities, sources of spending restriction, authorization law, the appropriation law. And I think we cover these later on, but you covered that in module 1 and you'll see it again in module 2, is remember that every appropriation starts off with going through the authorization process. Then appropriation is where we get our funding authority, our budget authority. CG on this, in the study guide, is not commanding general. What does CG stand for in the study guide, CDFM?
Comptroller General.
The Comptroller General. All right. Who is the Comptroller General? Not the person's name, but what is, or who is, or what is the Comptroller General? So the Comptroller General is the title of the person in charge of the GAO. That one GAO we just talked about. So that's why we get decisions or guidance from the GAO. So CG decisions, that's Comptroller General, not Commanding General. Page 16, 3116, whenever you deal with purpose, you have to apply the necessary expense doctrine. That's a 3-part test of 3-part questions that you have to ask when you're trying to figure out which appropriation to use to complete a task. So you have to first ask, does is what I'm trying to buy, does it bear a logical relationship to the appropriation I'm trying to use? That's one. The second thing I have to check is the expenditure prohibited by law. Did Congress already state you cannot purchase these types of vehicles or whatever you're trying to buy? Is it prohibited by law? The expenditure must also not be otherwise provided elsewhere. Is it something that we should be ordering from the supply system and we're trying to get a contract for? So as financial managers, these are the questions that we have to ask. We have to eliminate these things, because if it's an NSN item, which you are supposed, what is it, non-stock, whatever NSN stands for, if you're supposed to go through the normal supply chain to order that part or that item or equipment, and then you're trying to buy it, right? Buy it with the GPC. We do that, but technically you're violating the purpose because it's already provided elsewhere in some other statutory authority. So that all deals with purpose. 31 U.S. Code 1301. See, I'm repeating it again. I put it in the beginning, in the middle, and repeat it, because with this exam, repetition, repetition, repetition is how you're going to remember the concept. So on page 3117, we starts with time. Every appropriation has a specific time when you can create new contracts. They have a specific time when that appropriation is expired and when it's closed. And we're going to look at those a little later. So 31 U.S. Code 1502 says that the balance of a fixed term appropriation is available only for payment for expenses properly incurred during the period of availability. And your period of availability is saying when you can actually make new contracts or to complete contracts properly made within the period. Meaning I'm making adjustments for contracts that were already out there. So you have to apply on page 3118, you have to apply the bona fide needs rule. Typically it says current year needs, I must use current year funds to purchase supplies, to purchase things that are quick turnaround. You always have exceptions to every policy. Meaning if you have to purchase an aircraft or something that has a long lead time, I have to buy it today, but they won't be ready for another 3, 4, 5 months down the line. There are different exceptions to that. But basic current year needs, current dollars. That's the bona fide needs rule. When you deal with services on page 19, I'll try to slow down here. There are two types of services. You have severable service and you have non-severable. I'm going to deal with the non-severable first. A non-severable service is a job that once you start the job, you have to complete it to have a benefit. What type of job? Let's say we want to paint. We need to repair and paint this building. It's a non-severable project because I don't want to just paint the corner. I need to paint the whole room. I need to repair it. So that's a non-severable. Another non-severable listed here is training. Typically, when you go to a training, you have a training plan. You have certain topics of things that you have to study, and all together that will say, now you are certified. Now you've completed the training. You're qualified. So training is an example of a non-severable service. So whenever you go into a contract and it's a non-severable service, let's say we're in August and you have a non-severable service, then you will obligate the full amount of that contract with that current funds. It doesn't matter if you're crossing fiscal year. So that's why I did non-severable first. All right, severable service. A severable service is a job that even if I end the job early, I still would have received a benefit up to that point. And the best example given is like a cleaning contract. Like in our building, they come once a week. The cleaning folks come in and clean. But let's say the government no longer needs that service. I can end that contract, but I still would have previously received a benefit. Now, when it comes to obligating funds, if the severable service is 12 months or less, you will obligate the full amount of the contract, even if it crosses fiscal year. And again, you got to be able to read the contract that the KO writes. If the contract says this is a 15-month severable service, you can only obligate 12 months of current funds, and then the other 3 months will be subject to availability of funds. Or if Congress had already appropriated the new funds, you can cite the new funds, but most people won't because you wouldn't have received your authorization by that point. So you say subject to availability of funds. So does everyone understand severable service? So what you need to understand is when do you obligate and how much are you allowed to obligate legally?
So, for clarification,
Yes,
you
ma'am.
said that 12 months and over, we can only obligate for the current fiscal year, or
No, 12 months or less. So
okay,
let's say it's a 6-month contract, it's a 7-month or 12-month, 12 months or less, you obligate the full amount of the contract with current funds. But if it is a severable service and it says it's a 13-month contract, you can still limit it to 12 months of the current funds, but you have to wait until you get new appropriation to then obligate that additional money. Does that clarify that for you?
yes, ma'am, thank you.
Okay, so that's services, severable versus non-severable, and then when do you obligate the funds? So 12 months or less, you can obligate the full amount of the contract, anything above. So, and what the reason for that is because also non-severable, you're not going to break up the job because you have to pay for the full job to be completed anyway. So you're going to obligate, it's a one-time thing, the entire amount of that contract. All right, page 20. So remember I said, if you don't have the appropriation for the new fiscal year in the contract, the KO typically says subject to availability of funds. So on page 3120, the second bullet, that's what they're addressing there, is if you don't have the appropriations for the next fiscal year, you put that. Most people are familiar with subject to availability. But for those that are newer to the government, there are some years where 1 October comes and the Department of Defense have already received their appropriation. So in that case, if the Appropriation Act is enacted prior to the start of the fiscal year for which the appropriation is made, then contracts may be entered into. So what is that saying? If it's September, and I have a contract with a period of performance that starts October the 5th, if I have that new fiscal year funding already approved, I receive my funding, my allotment for that new fiscal year, then this is saying that I can put it in the contract, working with the KO to say that that particular funding is available to obligate those funds. Does everyone understand that, whether on the phone line or on our Teams? Let me pause there. Because most people are familiar with subject to availability because we typically operate under a CR for most fiscal years, but there are some years where in September, Congress does what it's supposed to do. And even if it's the DOD budget that's approved, but we have a budget by the time the new fiscal year begins. So let's say we're in FY23 and September comes, we will have already have FY24. We already know what we're going to get because we receive our allotment or we receive our funding document that says what we're expected to get. So we can cite those in a contract. On page 3121, you have talk about termination of contracts. Not every contractor we hire is able to complete the job for whatever reason. So termination of contract is saying, oftentimes actually for most contracts I've read, it always have that convenience of the government. If the government no longer needs the service, we can end the service at that point. We pay you for what you've done, but we can end the contract without any penalties. But what happens if the contractor defaults? I know some of you out there have been CORs. What do you do if you still have a requirement and that contractor defaulted on that contract? What are your resolutions? And think on the money side. Anyone would like to respond? All right, so oftentimes if the contractor defaults, you're working with the KO, and as a COR, contracting officer representative, it's your job to validate that the contractor is doing the job step by step. And if you see, okay, nope, then you're communicating with the contracting officer. Because if as a COR, contracting officer representative, you go ahead and accept their work, we have to pay for that work. You can't come back later and be like, yeah, we didn't like what you did. If your paperwork say, yep, you accepted it, the government is obligated to pay that contractor for the work they've done up to that point. Then the remaining funds on that contract, plus or minus some other additional funds, may be used to get a second contractor to complete the job. Now, if you change the scope, because a lot of us like to do that, right? When we get a second chance, we was like, oh, I didn't think about this the first time. You cannot change the scope of the original approved contract. Once you do that, then it becomes null and void, and you got to go back through the approval process for your senior leaders to approve that contract. So that's the stipulation between contractor default. All right, I don't see any hands. So 3122 talks about appropriation life cycle. We're still talking about time. 31 US Code 1502. Every appropriation has a specific timeline. So on page 23, that's a good chart for you to become familiar with. These are the primary appropriations we deal with. MilPERS, that's your military personnel, O&M, RDT&E, procurement, shipbuilding, conversion, Navy, and military construction. As you can see, you need to know the description, what it's used for. You also need to know the obligation period, because you'll know when it's free for you to make new contract versus it's gonna be expired. So MilPERS and O&M are expense type appropriations. They are 1 year annual. RDT&E is a 2-year appropriations. Procurement, straight procurement is a 3-year appropriation. Investment type, shipbuilding, conversion, Navy, which is also a procurement, is a 5-year investment type, along with military construction is a 5-year investment type. Most likely, if you see it again, I promise you it's not going to be in this format where you just fill in the information. And I'm going to show you in a little bit, the next couple of pages, the way that you will probably see it again in the future. I need you to focus on O&M on page 23 out of the 2020 study guide. Operations and management description. O&M, the last, let's see, in the middle there, so the 1, 2, 3, 4, 5, the 6th bullet down. You can use O&M dollars to do minor construction up to $2 million. The next bullet under that said, I can also use O&M to procure things if it's less than 250,000. So that's my threshold. Because this is the only spot where you're going to see this. So I don't have to request military construction fund if I have a small construction project less than 2 million. Of course, you're going to have to go through your typical approval process, but you don't have to go back to Congress to ask for funding. We don't have to go, the DOD doesn't have to go back to Office of Management and Budget and ask for construction project if they don't have it. You also have on page 24 your no-year appropriation. You do have some of those, and it's typically in what we call, the first line on page 24 says it, the Defense Working Capital Fund. I'm gonna give you the quick spiel on the Working Capital Fund. You're gonna see it again. If not in this, let me see, I think in this section. I'm gonna pause for a little bit because sometimes people come back and said they had a lot of working capital funds questions. If not, refer back to, I think module 1 has some working capital fund information in there. The bottom line with the working capital fund, think of your commissaries. Your commissaries, just like a civilian side, the commissary takes their money to buy the food to put on the shelf. Based on how much it costs them to put the food on the shelf, that's how much they charge us for that item. So when the customer comes in, the customer is then pays for that item and that money revolves. It's a revolving process. The difference between a working capital fund or a no-year appropriation and a commercial side is the government is not allowed to earn a profit. So on the civilian side, they can mark up the price, they can do all kind of, add some extra taxes and other additional things to it, because you can do that on the civilian side, but the government, no year appropriation, working capital fund, you cannot. So if, let's say the commissary looks at their 5-year execution and they see that they've consistently been earning a profit because of the prices they're charging the customers, then the 6th year, they have to lower their prices. Regardless of what it costs them to put it on the shelf, they got to lower the prices. So you'll always go to the commissary. I think they usually have to give their prices for the year. So you'll see year by year, the prices will fluctuate in what you purchase. On page 25, I'm going to go to the diagram that says appropriation life cycle. Every appropriation goes through phase 1, which is what I did on that chart, where I said phase 1 for MILPERS and O&M is 1 year, RDT&E is 2, procurement is 3, shipbuilding, conversion, Navy, and MILCON is 5. They're all in phase 1 for those years. Phase 2, every appropriation stays in phase 2 for 5 additional years. So even your military construction, which is already a 5-year appropriation, it stays in the expired state for an additional 5. So now we're talking 10 years. And on that 11th year, they enter phase 3. Now, remember I said you're not going to see it the way it's listed on page 23. And I'm going to give you a few examples on page 25. You may receive something like this, and I'll go to slow in case somebody wants to work it out. It might say today's date is November the 5th, 2012. You just received shipbuilding conversion Navy funds. When will these funds be closed? I repeat it in case somebody wants to work it out. And don't forget, we operate on the fiscal years. Today's date is November the 5th, 2012. You just received shipbuilding conversion Navy funding. When will these funds be closed? All right, so I'll give you all a couple minutes, whoever wants to work that out. And then I'll walk you through what you have to do if you receive a problem like that. Based on the knowledge that you have from page 23, and page 25 with the appropriation life cycle, that is how the question may come back to you. So I try to look for different angles that's not typically done to try to help you. All right. Who's got it? Let me drink some water.
It expired in 23.
Oh, on the phone line. Who we got on the phone line?
Hey, this is Leanne.
Hey, Leanne, welcome. All right, so I have a FY23. Anybody agrees or disagrees? Or still needs some time? Are y'all trying on the teams? All right, I don't hear any feedback. I hear crickets. All right. So, Miss Leanne, I'm gonna turn the phone up. See, can you tell us, and then I'll go over. Tell us what you did. How did you derive to FY23 when those funds will be closed? Go ahead, Leanne.
We're in FY 13. And so 5 years for the current and then 5 years for the canceled appropriation. Then that brings us to 23 expiring.
Okay, perfect. All right, were y'all able to hear that on the computer? All right, so let me go ahead. Miss Tina, did you hear that?
Yeah, I heard it. I couldn't respond. I had to do something, but yeah, I heard it.
Okay, awesome. Okay, so I'm going to repeat and walk it through. Today is November the 5th, 2012. So the first thing you need to know is what fiscal year am I in? Okay, 2012 is November. I'm in, like she said, I'm in fiscal year 13. So that's my starting point. Then you have to say, what type of fund am I dealing with? Shipbuilding, conversion, Navy. Well, that is in phase 1 for 5 years. So that's FY 13, 14, 15, 16, 17. And then it's expired for an additional 5 years. That's phase 2, which is FY 18, let's go, 18, 19, 20, 21, 22, which means it closes in FY 23. So you need to know how to walk through that. So that way on a test, if you see it again, they might say, when is this fund in the expired state, which is fiscal year 13 to fiscal year 17. Those is the 5-year period. That's how you're going to be able to break it down. Yes, Miss Tina. Your hands up.
Oh, I'm sorry. I thought I took it down.
Okay, awesome. All right, so that's how, and you could do it for different funds. I like to do the 5-year ones because it's like most people like, huh? It's like not everything expires in a year. So they're current. All right. Any question on those? So that's how you will probably see that again in the future. Appropriation life cycle, by knowing what phase 1 looks like for each appropriation, knowing what fiscal year you're in, then you'll be able to determine, okay, the expired state versus the closed state. All right, I don't hear any questions. We'll move on. What can you do with appropriations when they enter the expired state? Because I said current means I can do new contracts, new obligations. Well, what am I allowed to do when the funds enter the expired state, that 5-year period? Yes, Ms. Tina?
You're allowed to make adjustments.
Yes, you can make upward or downward adjustments.
Yes.
Right? So that means you have to already have had a contract in place, a MIPR, a WBS, whatever it is, that obligation would have had to have started in the current state. Then once it enters expired, even if, because some people from others, my program managers would say, oh, I got 2 million in prior year. Can I use it for this? I'm like, no. So it only can be used for bills for that fiscal year. So upward and downward adjustment. What about when the funds enter the closed state? What can I do with those funds?
You can only return them, but there's
There
a
you
1% that's left over that can be used if needed or something. I have
Right,
to look
so-
it up. Okay.
Yes, ma'am. So now we're closing out FY 18 funds, right? It's 2023. We're closing out FY 18. Once 1 October comes, we cannot do anything else with those funds. Those funds are returned to the miscellaneous receipts account in the treasury. It's somewhere in here. When I get to it, I'll point it out to you. But what if I get an invoice after that account is closed? Do I not pay the bill? What if I have funding now? So what Ms. Tina just said is when you go to page 3127, it says it on phase 3, but it also says it in writing. Page 3127, the second paragraph under 1% requirement is saying that if you receive an invoice for a bill and you see that appropriation that year is closed, let's say we receive something now for FY17, if we have the available funding, we can use up to 1% of the same type of appropriation to go ahead and pay that vendor. Because you know it's going to be painful for them to go through to DFAS to try to get their money. Why they wait that long, I don't know. But we do have organizations that wait till the 5th year, that last year, to actually start charging things. All right, so amount begins on page 3127. So I just finished 31 U.S. code. Which 31 U.S. code covers time?
1502.
1502. All right, y'all gotta be ready with these questions. I mean, you gotta read it ahead of time. I know Miss Tina was here, you were here for module 1, so some of it comes back to you. But when you're studying, what I'm doing is also, as you're studying, is you need to pause and check yourself as you're moving along in the process. Because again, all this information builds on each other. So when you get to the end of the section, recap where you started. 31 U.S. Code 1502 deals with time. Because even though it doesn't say it, I wrote it in my book, 3127, in the middle where it says Anti-Deficiency Act 31 U.S. Code 1341, 42, 15, 17. Next to it, I wrote amount, because those are the ADA chapters and section that deals with amount. So what you're going to need to know, since there are 3 of them, you need to know the difference between the 41, the 42, and the 15, 17. So page 28 says, 1341 says an officer or employee, we can't spend money before we get it, and we can't spend any more than what we're authorized to spend. That's basically what it's saying. But it's talking about appropriation. So when it comes to appropriation, we cannot spend any more or in excess or prior to getting those funds. So there are different budget authority that we receive on these amounts of funding. You have appropriations that gives us, and budget authority is what authorizes us to spend the money. It comes either in appropriations, contract authority, borrowing authority, offsetting receipts, or loan and loan guarantee. When Congress appropriates the funds on page 30, they can earmark the funds. They can say, they can put ceilings on it. You cannot spend more than this on military construction. Or if they want to ensure that you spend money in a particular area, most of it is usually construction in their particular states, they'll say you can spend no less than, that's your floor, or fences, they put fence around the funding to say you can only use for this particular purpose. So that's the concept of earmarking, appropriation. 31 U.S. Code 1342 on page 31 talks about voluntary services. Typically, you cannot accept voluntary services for a job that is typically paid. For example, if you have a GS-12 position, nobody's filled it, and you have General so-and-so's spouse wants to come in and they like, hey, I want to keep up on my craft. I can come in, help you guys out, and you don't have to pay me. And that way I'll keep my skills up. You cannot accept it. So let's look at what these exceptions are. If the compensation for a position is fixed by law, which is what I'm stating, it's a GS-12, it's fixed by law, then an appointee may not agree to serve without compensation. That first one, straightforward. If it's a paid position, no, you cannot come in and volunteer just to keep your skills up. If the level of the compensation is discretionary, that means I can change it to 0. And the only thing I can think of is the family readiness groups, FRG. Way back in the day, nobody got paid, but I think there's some positions now that they do pay. But if you have that leverage where you can put that amount to 0, then you can legally accept volunteers. Only if that organization has the statutory authority. A service offered clearly and distinctly as gratuitous with proper record made of the fact does not violate the statute against acceptance of voluntary service. But examples of the statute are these organizations such as the Red Cross, the Candy Stripers, museum volunteers. There's some regulation already out there that authorizes voluntary services. So what you need to take away from this is if you're dealing with questions of voluntary services, yes or no, you need to look under 31 U.S. Code 1342. So 1341 was appropriation, 1342 deals with voluntary services, and 1517 deals with apportionment. That's another term. So if you didn't catch module 1, I'll go over it again. Actually, I'm going to jump to page 33. I'm a visual, and then I'll come back to 1517. Congress appropriates the funds. Office of Management and Budget apportions funds, and DOD issues allotment. Then everyone commits, obligate, and outlay the funds. So outlay is the same thing to us as disbursement, but the official term is outlay. When the funds are removed from the treasury to pay that obligation, that action is an outlay. So you need to know the difference between those 3 A's. Appropriation. So remember, 31 U.S. Code 1341 deals with violating appropriations. So OMB gets appropriations. Then apportionment is given to the Department of Defense, Department of the State, Department of Homeland Security. They all get apportionment from the Office of Management and Budget. So going back to page 32, when you see 31 U.S. Code 1517 talks about spending in excess of or in advance of apportionment, that lets you know that DOD and the other agencies can violate the apportionment. So even though we receive allotments, oftentimes if you go to your hire and your next hire, they can try to work it out before it gets to that level where DOD violates apportionment. Any question on the funding and the funding flow? And actually it says it on the bottom of page 33 for outlay. Finally, the government liquidates the obligation by making a disbursement or outlay from the treasury. But you're not going to see disbursement too often. You're going to see the word outlay, and most people are not familiar with it. All right. So let me go back with the fund flow. When Congress appropriates the funds, 2 things happen. On one side, the OMB begins the apportionment process, but on the other side, the Treasury issues a Treasury warrant. That is the legal action, going back to Article 1, Section 9, where it says, no money can come out the treasury unless you have an appropriation law. So once Congress appropriates the law, the treasury has to issue a treasury warrant. And all that is a notice to all the agencies that their account's set up, they got the appropriation law, everything's set up, they can start spending. The OMB begins the apportionment part. The apportionment document, and I'm going to throw it out at you because it's also in Module 1, is an SF-132. So what does that look like? When Congress appropriates the money, OMB begins the apportionment process, but it looks like this. The agencies, the DOD will submit an SF-132 and say, Congress just appropriated the money for defense. I'm requesting my funding, my apportionment on a 132. So 10 days, within that first 10 days, the agencies submit an SF-132 to OMB requesting their funding. Then OMB has 30 days to issue the apportionment. And because I know that this ties into something else, that's why I'm repeating it here, even though you don't see it on the page. All right, so 3.134 augmentation. Typically, we do not augment our funds, but an agency may not augment its appropriation from outside sources unless you have the statutory authority to do so. So same thing, if a soldier loses a military gear that they have to pay for, and they go in and they pay for it, that money is not going back to that organization, because that money all goes back into the treasury in that miscellaneous account, receipts account for the treasury. And then that organization's, their inventory just drops. On page 35, we're going to switch to talking about gifts and donations. So I'm going to jump over the page again with the study group. I don't go page by page. I'm just pointing out certain things that are important that people often overlook. So on the bottom of the page, it says gifts to employees. And even here, they reference you, they tell you, go back to Module 1, Competency 2, and you will find, and under Manpower Management, you will find more information dealing with gifts. But in Module 1, it basically says, because most people want to know, can I accept a gift from a contractor? The answer is yes, but you are limited. If the value of the gift is $20 or less, yes, you can accept it. If the total value for that year, annual year, is $50 or less, yes, you can accept it. What am I talking about? If they give me a pen and the pen is $10, I can accept it. If they give me a bottle of water and the water is $13, I can accept it because it's one-time gift, got to be under $20. But when I add the two together, if it's more than $50, I cannot accept that second or third gift. Does that make sense to everyone? Trying to clarify that. So that's taking gifts from contractors. And then, can you accept gifts? Let me see if they say it here. Nope. So it's in Module 1. So what is the limit on gifts? When people come around and they say, so-and-so is leaving, would you like to donate towards their gift? You are limited to how much you donate. How much and what is that limit? Does anyone know? It's not on these pages because it's in Module 1. $10. So remember $10. So when people coming around and they're like, oh, well, it's General so-and-so or Colonel so-and-so, can you donate more? You can tell them, nope, ethically, I'm not restricted to $10 or less. And it's a voluntary service. So if you want to donate, it's voluntary. All right, so page 3.136 talks about penalties. If you violate an ADA violation, Anti-Deficiency Act, whether it's purpose, 31 U.S. Code 1301, time, 1502, or amount, 1341, 1342, or 1517, you can have administrative penalties or criminal. Administrative means retraining. Or if you consistently make little mistakes, you're not getting it, I may need to take you out of that particular job or position. Criminal, that means they can tie some criminal acts, $5,000 fine or 2 years imprisonment, or both. You can be tagged with both. And if you deal with money, especially if you're on the pecuniary side, where you actually deal with cash, people try things, especially when they're not used to seeing so much money. They try things. So you got to be, as a financial manager, you got to know what the do's and don'ts are, and don't accept things no matter what people's ranks are, because you can end up either going to jail and thinking you're in cahoots with that other individual on the criminal side. I say, I don't go to jail for nobody. So administrative penalties or criminal penalties, $5,000 fine or 2 years imprisonment. So what happens if you identify an ADA violation in your organization? 3137 talks about reporting. And if you have an older study guide, it's different for the 2020 book. So make sure you listen up. If you identify, you have 2 weeks once you identify an ADA violation. That means it's something you know, okay, oftentimes it's things that we can fix, like, all right, whoo, say. But if it's something that you cannot correct and you know it's a clear ADA violation, within that 2 weeks of discovery, you have to notify your hire. And then the end of that paragraph says, the preliminary review should be completed within 4 months from the date of initial discovery. So I got 2 weeks. Let me write that down. 2 weeks and 4 months. And then that's doing your investigation. What happened? Why did it happen? And what are you doing to make sure it doesn't happen again? Is there relief for ADA? Page 3138. Let me read what it says. In light of the provisions in 31 U.S. Code 1351, it has been held that there's no private right of declaratory, or mandatory, or injunctive relief on the ADA. So if it gets reported up to, it has to get reported all the way up to the president. And if you go on, what is it, gao.gov and type of ADA violations, you can see some of the letters that are out there. Who could tell me, why does the president get notified if there's an ADA violation? Going back to when we first started. Whose funding is it? Who's the budget? Whose budget is it? Remember when we started, we said the executive branch is the president's budget, right? So if you think about how it feeds all the way back, when I said GAO is actually monitoring the executive branch and how we spend the money, it makes sense now that the ADA violators would then eventually go to a letter to the president to say who, and they name the people and what they violated, even though I don't know what the outcome is, but it goes to that level because it's the president's budget. However you want to look at it, because the president submits the budget to Congress. All right, so everything else pretty straightforward. All right, we start talking about continuing resolution on page 41, 3141. So just remember, you cannot take any money out of the treasury without the appropriation law in place or a continuing resolution, which is a temporary appropriation. It's a stopgap. So they have to have either or. And if they don't have anything, then the government was shut down for those particular time. And it's happened. There's a few years ago, they actually shut down, like, up, go home. And our paychecks didn't come in when it was supposed to. Then we knew it was real, right? Like, where's my money? All right, so page 14. So let's say you're operating on a continuing resolution. They often say you are limited to the rate of operation for the previous year. So you can't be obligating and spending more than you normally would in the year prior. But let's say when Congress came back and approved the funding, they gave the Department of Defense less than what we were executing at that particular time. Did the DOD commit an ADA violation at that point? So under the CR, they were operating under the rules of the CR, no issues. Then Congress comes back and they put some restrictions on spending. The answer to that question is no. There's no ADA violation if you operate under the rules at that particular time. And I'm referring to page 3144 on the rate of operation. Okay, somebody's trying to get in. I'm sorry. Can you all see, for those that are on Teams, can you see that that person trying to send me a message? I don't know if they're sending it via the.
No, Miss Helen, I can't see it. I
You can't
think
see it?
the messages only come up on your side.
Okay, I didn't know if they was putting it in the group. All right, because they're trying to get in. Okay, I'm gonna pause for a little bit. Let me see if I can get her in. So if there are any questions on anything right now. No, I need to see. Let's see, Miss Ivory. Okay, are you able to pull in personnel? Like typically in a Teams, if you want to add a person, I can give you your name. Miss Tina?
No.
No?
Sometimes
Okay.
yes, and sometimes no. I think it all depends how it's set up.
Okay, all right, let me see if I can find her in here. Teams, all right, let me get her name. Victoria Ivory, okay. All right, bear with me. People.
Because I didn't see anyone try to, I didn't see them trying to pop in, but I had my head down looking through the book, so.
Okay, let me see. Oh, there she is. Okay, so I think I found her. Okay, hopefully that works. All right. All right, so let's move on. So they talk about the government shutdown on page 46. You want to read through, and I think they mentioned the years when we actually had funding initially before that 1 October. So those go through that, subject to availability of fund versus actually citing the appropriation for the new year. 3147 talks about accountable individual, a DAO, departmental accountable official, certifying officer, dispersing officer. If you're certifying funds, if you're actually dispersing funds, or you're a certifying official, then you are an accountable individual. So usually it's that last person that presses that button. So make sure you know the differences, because the definition's on page 47. They go into illegal and improper payments, reporting requirements. Those are things you can read through. Advanced decision, page 49, is no different than if you're trying to buy something, you're trying to do something, you can get your general counsel or your ethics lawyers involved to kind of help you figure out, can you legally make that purchase or do whatever it is that they're trying to get you to buy. Relief, page 50. Those accountable individuals, as I mentioned, the ones with the pecuniary certification, meaning they actually are certifying the disbursements, they have some relief under on page 50. Physical loss, if they have funding, the Secretary of Defense determines that the official was carrying out official duties when the loss occurred. You were doing things, you were doing your job, things, nothing out of the ordinary, and unfortunately, the loss occurred. The loss was not the result of anything illegal, improper, or incorrect. The loss was not the result of negligence, right? Not anything because of what you did, it just happened. So you can be granted relief for the physical loss. Illegal, incorrect, or improper payment. Payment was not the result of bad faith. The certification or payment was based on official records. So what all of this is saying with illegal is, let's say a person on the finance side, if a person brings you a lease or a marriage certificate saying they're married, everything, the stamps there, everything looks legal, and that's what you use to pay them basic allowance for housing or whatever else for the with dependent, then you can be granted relief. So whatever supporting documents you have, as long as you make sure they are legal before you accept them and make the payment. So that's your relief. Statute of limitations on page 51 says for error, 3 years. So you could say, well, I accidentally put an extra 0, or this is supposed to be a 4, but I put a 3, or whatever it is. If it's an error that you made and it's caught, but it's 3 years from the time the CG receives the account. What does CG stand for?
Comptroller General.
Yes, ma'am. Comptroller General. I'm not going to get anybody, huh? I'm waiting for somebody to say commanding general, because in our world, they're like, well, CG, the general. I'm like, no, not in the CDFM. Comptroller General, and that is the title of the person in charge of the Government Accountability Office, GAO. General. And GAO is the independent auditing agency that works directly for Congress still here, because it looks like, okay, I think we're back. Murphy's Law, but we're at the back of 3.1. 3 years from the time the CG receives the account, and if it's for fraud, no limit. So as financial managers, that's why I'm a stickler with whatever it is that I'm going to put my name on, because I know that those records are going to be there long after I leave the government. My name will still be tied to these transactions. So you should be the same way. That's why we have to do fiscal law training. That's why we have to understand the use of these appropriations. So statute of limitations, 3 years or no years, no time limit. So at the bottom, it repeats again, 3151, the basic axiom, the basic idea behind fiscal law is you have to have the authority to spend taxpayers' dollars. It's basically me putting it in my words. So that is fiscal law from module 3. Now there's some charts starting on page 52 all the way to 54. Make sure you review those terms. These are terms that were all used in that section. There's one particular term that I couldn't find it anywhere else but on this chart on page 53. 1, 2, 3, 4, 5, 6. It's in the middle. That 6th item down says 41 U.S. Code 6301. I have not seen it anywhere else, but I always get feedback that it shows up again when people go sit down to take the test. Feed and Forage Act. So typically you cannot, you being the Department of Defense, the other agencies cannot spend any more funding than what they receive for that mission. What the Feed and Forage Act allows, the Department of Defense is the only organization or agency that this applies to. If we're deployed somewhere and we need medical supplies, we need food, we need fuel, we need quarters, place to stay, and we don't have the obligation authority, the funding, the authorization currently, we can spend more than what we have to get exactly what we need. Let's say we go into an environment that's extremely cold and we don't have the gear in our military inventory to cover our soldiers, for them to protect themselves. And once they get over there, they have to buy it. So under the 41 U.S. Code 6301 Feed and Forage Act, it allows the Department of Defense the ability to do so. So make sure you at least read the definition of the Feed and Forage Act and understand those are the conditions. There's got to be things that they need to have and they do not currently have, nor do they have the funding initially. They can spend more and just do the cost transfers and stuff later. On page 54, I also mentioned the Treasury issuing the Treasury warrant. Two things happen once Congress appropriates the money. OMB begins the apportionment process and the Treasury issuing a Treasury warrant. That's the definition of the Treasury warrant on the bottom of page 54. So as you're looking through these, make sure you point those out. All right, so we're gonna switch gear because we gotta cover finance today. And let me look at my notes also. Make sure I cover some of the things that people give me feedback on that I need to cover. All right, so any question on the fiscal law portion of it before we switch sides? All right, so let's begin on page 325. The functions, those are the four major functions of finance. We're either dealing with entitlements, or people entitled to get certain payments. The payments, when we accept the payments, we got to have certain supporting documents. Or if you owe the government, we deal with collections. And then we also have to monitor and control the funds on the disbursement side, control of public funds. So nothing else, you need to know the four functions, because if you're given multiple choice and they say which one is not a major function of finance, then you need to be able to pick out which one. Entitlements. So I like acronyms. EPCC. Entitlements, payments, collections, and control. Make sure if you discuss an acronym that you know what the acronym means. Because if you see it on the exam, just like I say CG, most people typically say Command in General. When it comes to the study guide, it is not Command in General. It is Comptroller General, which is the title of the person in charge of GAO. And if you notice what I'm doing, it's not that I forget, it's I'm repeating it so that I remember every time I say the same thing. So entitlement begins on page 328. That's the first function. I wrote it in my book, first function. We're looking for authorization. Are people authorized? So I'm looking for documents. So I build a voucher. Voucher preparation includes a copy of the contract, proper invoice, proof of receipt, proof of acceptance, orders, travel orders. Is it a purchase request? I need to have that document. Page 329, a disbursement voucher must contain the following 5 elements: the voucher heading and date, the accounting classification, how we're going to pay for it, how much, how we're going to pay it, EFT, treasury check, cash, and who we're going to pay, the payee. And they gave you a diagram on page 10 The diagram says once you certify, you are accountable, you are liable. That's how I interpret that diagram. Certification equals accountability and liability. That means you have pecuniary liability. That means if you make the wrong decision, you may be responsible for paying the government back in that process if you do something incorrectly. We talked earlier in fiscal law about accountable officials, that dispersing officer, your certifying officers on page 11. So they have the definitions again on page 11, 3-11. I'm not going over that again. Talks again about advanced decisions on page 12. If you have to make a payment, you're not sure about it, get input from someone else hired from you, but get it in writing. Because I promise you, people forget things, or they'll be like, I didn't say that. Get it in writing. If they authorize you to do something and you're not really sure, get it in writing. 3-13 talks about improper payments. I didn't have anything highlighted here. Improper meaning if you're looking for fraud, waste, and abuse. Are they violating any payments before you make it? So it's telling you to do your due diligence. All right, so now let's look at pay 3-14. Certifying military pay versus certifying civilian pay. It's a little different. So let's look at military. So a couple of things you point out there. Military is paid on a 30-day month basis, regardless if the month is 31 or if it's 28 days, they get paid on a 30-day month. If they're entitled to special pay, jump pay, hazardous pay, whatever, they have special pay. Leave, the military members, they get 30 days leave per year. They can sell back up to 60 days of unused leave per year. Allowances, they get subsistence, money for food. BAH, basic allowance for housing, is your quarters for housing. And they also get a clothing allowance. Clothing allowance says that officers get a one-time clothing allowance of $400, and the enlisted gets annually. Typically, it's, I guess, the date of which they entered the military. So if you came in October, then I guess you get your clothing allowance in October. So every year they get a clothing allowance to buy clothing. On page 16 for the military, they can have up to 6 discretionary allotments, meaning I want to do an allotment to pay my car. I want to do an allotment to pay my mortgage. I do all that in my pay. So they can do up to 6 discretionary allotments, and non-discretionary allotments are unlimited. And to me, those are when somebody else taking your money. You didn't start the allotment, but somebody else started it for you, such as child support or things like that. On the civilian side, page 17, which is where most people have to focus because we got so many conditions, certified time cards. So civilians on their work hours, the first bullet on page 17, the last sentence, we have 26 pay period a year, which is 52 weeks. So if you're asked for the pay period, it's 26 pay period. We have premium pay, overtime. Those are pretty straightforward. And overtime may not be waived. Leave hours, 3-18. Family-friendly Leave Act. The employee may use up to 104 hours of sick leave, even if the employee is not sick, to provide care for a family member. So let's say you have a civilian and you have a family member that's sick, you can use your sick leave up to 104 hours to take care of them. Let's see, the other one, leave without pay. meaning you can go, you can pause, leave, you don't get paid, but you still have your job. The next one I normally see is the Family and Medical Leave Act provides up to 12 work weeks of job protected unpaid leave during any 12-month period. So that one's important. On page 3219, establishment and control of employee pay records, the second paragraph there. The last line of that says civilian pay records are retained for 56 years. So I don't know how long the military is retained because it didn't mention it. But for civilian, it's saying so long after we're gone, our pay records will still stay intact for 56 years. Like, let's see. Yeah. So at the very end, it'll talk about other records, how long you keep them. So I wanted to point that out. Payment for travel. So with the travel, we often get questions on page 3222, PCS. Okay, yeah, PCS moves. Who pays? So when you move, it often says all costs associated with a civilian permanent duty station change is normally charged to the gaining activity. So I'm reading pretty much the second to last sentence of that paragraph on page 3222. Exceptions to the rule that the gaining activity pays are as follows. I always tell you, it's always an exception. So a normal civilian PCS is the gaining unit is paying for them to come. Except between agencies, reduction in force, transfer of funds, or movement under the DoD Priority Placement Program. That means you're losing organization or somebody else is paying. RIFs, transfers, base realignment, and closure moves from OCONUS, overseas to stateside, or from overseas to Hawaii, OCONUS to Hawaii. That means your losing organization pays, but typically the gaining organization pays. So I'm going to put losing organization pays. Any questions of me? I haven't heard y'all in a minute.
Miss Helen,
Yes, ma'am.
for the moving, is it true that anytime OCONUS is involved that they pay?
Based on what I'm reading here, yes. OCONUS is
Okay,
telling me,
now I understood it.
yeah, is the losing organization is paying, because that's the only time they mentioned the OCONUS. So let me look up here. Movement of a military from one permanent mission within or without the United States referred to as. Okay, yeah. So anything OCONUS is involved is the losing organization pays. Okay, so I wanted to point that out to you. All right, even though I'm skipping, again, I don't see the exam, so I'm not telling you to skip all this other stuff. What I am telling you is you need to read everything on these pages just to be familiar with them, just like the payment package on 23. I'm not going to go into detail, but when you're reading, you want to read through it. Okay, so the next part is I'll touch a little bit on the prompt payment. 3223 starts, no, 3225 starts the prompt payment. They have the calculation on 26. I've never had anybody who said they actually had to do the calculation, but you need to understand what it means. If I say 210 net 30, you need to at least know what that means. So when I'm accepting goods or services, and in the contract or the invoice, it says 210 net 30, it means if I pay the bill within 30 days, I can take a 2% discount. And if not, you pay the full amount. So make sure you review the prompt payment, if nothing else, page 26, just to kind of see if you have to calculate the payment due date. Then that's the steps you will have to follow. Oh, yeah, here you go. So the bottom of page 27 went over what I just talked about, the 210 net 30 within that 10 days. Yeah, if you pay, you get a 2% discount if you pay within 10 days. If not, if you don't pay within 10 days, then you got to pay the full amount in 30 days. And that's about all I have on that one. On the top of page 29, make sure you know the definition of a DSSN. Not everybody had the privilege of working in a DFAS or a finance office, so you might not be familiar with the dispersing station number. It's just assigning which particular office is going to disperse. So it identifies the office that's going to be making the payment. DSSN is important to know. On page 30, disbursements of government funds, the primary way is, of course, EFT and the treasury check. That's listed there. Whenever you see the most important, the preferred method, the primary ways, those are important things to know. So EFT is the preferred method to make payments. Okay. Miscellaneous payments, let's see it. Disbursement voucher. Yeah. Nothing there. E-commerce starts on page 32, where it talks about electronic document access, your EDA, if you have access to wide area workflow, and you have EDA where you can see the contracts. Your contractors will go into this system to put in their invoices for you to make the payments and so forth. So you have EDA, EDI, and EFT. Those are your e-commerce. Whenever you have a list, make sure you know what's in the list. So if they add another one, and most tests, they'll say which one is not part of that process. So make sure you read the question and see what they're asking you. Because, yeah. Okay, most of it is straightforward. Let's move to collections, because I did have some folks that said they were asked the form numbers. In the collecting function, which is the third function, receipts are collections credible to the Treasury Department miscellaneous receipts. So remember earlier I said if the soldier pays for that lost equipment, that funding goes to the Treasury. It specifically goes to the miscellaneous receipts. So the soldier pays it on a CCV or cash collection voucher, which is a DD form 1131. I'm going to put DD 1131, cash CCV. And that is to make the payments into the Treasury. Reimbursements, all the 1131 is used for all of that in a refund. You got some collection and reporting systems listed on page 3235. I've heard of IPAC, not these other ones, but you can see the list there. I don't go into anything detail other than knowing the list and what's in it. Same with the debt collection. The collection on page 37, collection of debt owed by individuals. So it says, if a collection of a debt owed by a current military or a civilian, typically if the individual is not making the payments, eventually you're going to do a salary offset. The money's going to automatically come out their check. So that's what that first bullet is saying. But what if that member is no longer working for the Department of Defense? You got to send that letter. So any former military member or former civilian employee who owes money to the DOD will be sent one letter that explains how much is owed and why, so that they can repay it. If such actions are unsuccessful, the matter should be referred to DFAS. And DFAS may proceed with collection actions, or they might submit it to offset from your refund, your federal refund. They could either collect a debt by referring to the IRS, which is what I just mentioned, or if you work for a different agency and they find out, okay, you work now for a different agency, they can refer it to that different agency. So those are the options for collecting a debt owed by an individual. Then on page 38, it talks about collecting debt from a contractor and how a debt can be incurred, because we've had it where you accidentally make a miscellaneous pay and you pay the wrong vendor. And then you eventually realize that now that vendor owes the government back that money because they didn't, it's not their money. So you got to work to recoup it. So that's the debt. Let's see, we got a couple of thresholds. Referral or delinquent debts, if it goes to your debt management office, I'm reading on page 3238 in the middle. Threshold, $25 or more if contractor has a tax ID number, or $100 or more if the contractor does not have a tax ID number. Debts must be forwarded to your DMO no later than 90 days following the debt repayment due date. So read through those specific. And then eventually referral of delinquent debts to the Treasury. And what does it say? No earlier than 120 days. On the top of page 39, the first paragraph says, do not pay. So this is typically when you have contractors. The Office of Management and Budget, that's what OMB stand for. OMB is the budget office for the executive branch, or the president will issue the do not pay document, and it includes the list of those organizations that the Treasury will not pay. Oh, let me make sure I say that. Okay, DNP provides many data sources in one place, which agencies can use to verify if someone is eligible to receive payment. And then the fourth function of finance on page 39 is control of public funds. So you got to have that internal work. And if you read the first paragraph on the control of public funds, it goes back to the fiscal law, pecuniary liability. Certifying officers are pecuniary liable for erroneous payments that result from information, data, or service they negligently provide to the dispersing office. So on the budget side, we don't have, not as bad, because we can usually work it out. But if on the money side, once you make that payment out, you will have pecuniary liability where you got to pay that money back if it turns out that you made a mistake. All right, let's talk about some major and minor loss on page 40, dispersing officer accounts. So of course, we got to have constant accountability. As a dispersing officer, I used to have to make sure I count that cash every day and count the documents. If the cash wasn't there, I had to have the corresponding documents that was there. If I was out of balance, it says a physical loss are further segregated by either a major loss or minor loss. A major loss is $750 or more, or if it's a loss associated with fraud. And a minor loss is $750 or less than $750. So $749. $750 is your threshold. Major loss versus minor loss is what I want to point out there. Then they check issue overdraft versus underdraft. You can read those definitions. All right, 3241 talks about delivery of checks. If it's an undeliverable check, let's say they have to mail you a check and then you had changed address or something, The DO will attempt to deliver the check to the payee for a 60-day period. So for 2 months, they're going to try to get you to check. A check is determined undeliverable if after 60 days from the date of issue, it has been impossible to deliver. So undeliverable check, your limit is 60 days. Anything over 60 is undeliverable. The next one, let's see. The third one, payment of old checks. So if you're bad like me, if it's a check and it's only like $2, $3, sometimes I forget to cash it, and then it sits there, and then, oh, by the way, the year is up, and what do? So treasury checks are payable for up to 1 year from the date of issue. After that time, they are no longer, I can't use that check anymore, but the amount may still be valid because I'm still owed that money, but I have to now contact the agency for them to replace the check and send me a new check once they confirm that the original check was not cashed. And then finally, spoiled check. Spoiled check is like I have a check and I spill coffee on it. I can't take it to the bank and cash it because most likely if they can't read everything, they're not going to cash it. So the check has become spoiled and non-negotiable. Should be returned to the dispersing officer or whoever sent you the check. You got to send it back to them so they can issue or reissue you another check. So spoiled check is the definition. So the Borrowing Act, 31 U.S. Code 3702, requires the government to receive a claim within 6 years from the time a claim accrues, other than for entitlements. This law applies to civilians and military. So that's another law you need to learn. Just like the Budget and Accounting Act of 1921, you now need to know the Borrowing Act. You must file a claim within 6 years from the time you think the government owed you some money. On page 3242, we're winding down. We talk about the dispersing officer reporting requirements. So for finance, you got to know these documents, like which one's a daily report versus monthly. So when you're separating your study, make sure you break them out that way. So you got a daily statement of accountability. So I don't know if you're going to see the word or you're going to see the DD 2657. What is the DD 2657? What is the SF 1219? The good thing, the 1219 statement of accountability. I've dealt with the deposit ticket at the bottom, the SF 215. So you kind of have to look at the differences because you may need to know like which one is the daily report versus monthly. The statement of accountability is monthly. Daily agent accountability summary, we've done the 2665. That's when your dispersing agent, you keep that going, and the cashiers update their DD form 1081. So I'm reading the third bullet on page 42. So kind of focus on this area for the finance so that you know which form and what the purpose is. If I'm going to be depositing money, I'm using the SF 215. The OTC net is usually when I deal with checks. People write checks and I'm depositing in one place. OTC net is that over-the-counter application or system that we use to send the checks. It automates the system or the process. Record maintenance. So earlier we talked about civilian payroll being kept for 56 years. So record maintenance also says copies of vouchers, books on the finance side, records, and any associated documents must be retained as government property for a period not less than 10 years. So any other supporting documents for the government must be kept for 10 years. On the civilian side, I don't know why we have to go to 56 years, but for the civilian side, civilian payroll is kept for 56 years. All right, so what are your questions as it pertains to CDFM Module 3, Competency 1, Fiscal Law, or Competency 2, Finance? What questions do you have of me? So we covered a lot today, because I was trying to make up for 2 sessions. Any concerns? Anything you want me to go over? Y'all too quiet. Yes, Miss Tina?
Yeah, Miss Helen, I just want to say to you, as always, thank you. Also, too, to people that are dialed in and the 3 that I also see here on Teams with us, that once Miss Helen posts these on YouTube, there is an option button inside of the recording that you can select and review the transcript notes, and it will type out while she's speaking. So literally you can stop it and type in extra notes and so forth in your text binder for the study guide. So I just wanted to add that because I was kind of
Right.
in and out of it the last 2 hours. So yeah, I'm
Okay.
looking forward to going back and listening to fiscal law and also module 3.2. So I just wanted to add that in case this is the first time anyone's joining you.
Okay, I appreciate that feedback. And the good thing with the videos, because I do get a lot of emails back that people say, hey, you know what, I can be driving and I can press pause or I can repeat things. So that's kind of where I went with that's why I started the YouTube to begin with, because most people couldn't get here during this time frame, during their lunch, and then everybody's in different time zones. So with the YouTube, you're welcome to share the YouTube with anyone out there who's studying for the CDFM. Leave comments, click like, click share, because the more frequent activities that shows up on the YouTube page, then the YouTube folks or Google folks will then push it out to other people. Anybody that searches CDFM, then voila, here comes the video. So people can find it easier. So if nothing else but leave a video, or if you see something wrong in the video, I promise my feelings will not be hurt. I'm a one-man show. So sometimes I may either say something incorrectly or I didn't clarify something. You're welcome. If you want to reach out to me personally or put a comment out there, I promise you I don't get offended, because the more eyes that can look at it and give me some feedback will help. This is in addition. So if you're working, if you have an opportunity to go to the ASMC 1-week course, I highly recommend it. But when they actually give you the whole 1, 2, and 3 in 5 days. So most people now have to slow down and focus on particular areas. So that's where I come in, is to help you to focus on particular areas versus looking at all 3 modules. Because you're going to have to, once you finish the 3rd exam, you're going to be like, hey, this information was on the first one and the second one. You'll realize all the information does overlap. So it is a good idea to go through all 3 modules first and then come back and focus a module at a time. All right, well, that's all I have. We got a few minutes to spare. I can hang out for a little bit if anybody have any last minute. And if not, I will move on. All right, so thank y'all for stopping by. This is Helen Thomas and the CDFM Study Group. I'll see you guys again next time. I'm going to stop the recording now. This is Helen. If I could figure out how to stop the record. Okay, hold on. Okay, transcription has stopped. Okay. Yes, I heard my name. Yes, ma'am. Okay. And I try to get the for those on the phone lines, I'll try to get this number each week. I used to do just the teleconference, but now I'm trying to merge the 2 together. So I'll make sure I do better with getting the teleconference number online each week, because I do have a number for those people who can't get on Teams. All right, I see the chat. Oh, okay. All righty. Okay. All right, you're welcome. All right, I hear no questions, so I am going to sign off now.
Thank you.
You're welcome. Y'all have a great rest of the day, rest of the week.
You as
Thank you, Miss
well.
Helen, as always.
And
It's
don't
very
forget to
appreciated.
review what we went over, because the more you go over the information, the better and the easier it gets. Okay. Have a